as well joins in on the show. Mayuresh, I don't know how closely you've been tracking trend, but it's never been a doubt about how much sales they can clock. It's always been about how expensive the stock is. But clearly, this is one company wherein the revenue and PAT growth seems to be defying, the valuations of the stock price. Still a buy for you at 1,500?
Afternoon, Aisha. So on the O'Neill lens, the momentum continues because it's on the it's above the pivot levels that we closely track. Again, as Vinny was mentioning, Zara's numbers have been very, very good. But I think the more critical component in terms of contribution comes in from Westside. That's almost 70% of revenues for Trent. And it's one of the most pragmatic business models that you can probably think of. The private labels probably extend itself in terms of both the margin performance that Westside individually contributes to the overall Trent margins. And the same sales growth have been in double digits, 10-11%. So the large expectation in terms of gross margins expected to be reasonable around that 48-49% mark. EBITDA margins between that 15 to 17% kind of a band will basically mean that the compounding that probably happens on the bottom line as discretionary spending holds up. Because apart from Westside, I think Zudio, which is the brand that they probably house, a lower ticket brand, has significant amount of sales growth as well. Add to that, Zara contributes to their JV as well. So yeah, I think second half should see significant amount of discretionary spending coming back as the festivities come through. And therefore, I think the momentum of this stock can very well continue.
Okay, so that's a take coming in on Trent and Zara, but I'm also intrigued to hear your views about mid-cap IT. Look at a Zensar Tech today. After that solid 12% rise in the week gone by, today again it's up around 12%. And even the numbers from other mid-cap IT companies have been quite strong. What are your top favorites here, Mayuresh?
Afternoon, Anisha. So, I think mid-cap IT companies have reported a very stable and a robust set of numbers. I think the large expectations after large-cap IT companies started reporting, and when Infosys probably gave that howler, is that mid-cap IT companies might also miss their mark. But I think across the spectrum, mid-cap IT companies have done exceptionally well. To take into account the R&D companies, KPITs, and the Tata LXIs of the world. We probably look at LLT, LLTI, Mindtree, Zensar. You look at a very small company called Datamatics. I think none of these companies have probably disappointed at this juncture. So yes, I think the arguments that probably go in favor that even if the order book starts shrinking, mid-cap IT companies typically get order books between $1 million and $5 million in terms of a ticket. And therefore, I think those orders can very well continue in spite of an impending slowdown. BFSI, which is obviously a big contributor for the sector as a whole, can see some eminent headwinds and manufacturing out of the European zone as well. So I think the first quarter numbers are going to be very, very interesting this fiscal round on what is the reported number in terms of both constant currency revenue growth as well as the order intake. But so far, I think mid-cap IT has not disappointed. I'll probably wait for pullbacks, Anisha, to answer your question. A few of these stocks in late-stage basis as per the O'Neill methodology, and therefore waiting on pullbacks for a stock like a KBIT or even something like an LTI Mindtree persistent for that example as well. So both these or three of these counters, maybe pullbacks is something that I'll probably look at because valuations will also become a tad bit more reasonable.
That was about the read-through coming in for the IT sector.